There's big news that just released surrounding Mohnish Pabrai. He sold almost 80% of his shares in Alibaba. At least in the value investing community, over the past year, Alibaba has been one of the hottest stocks. I do hold Alibaba shares, and I'm a huge fan of Mohnish Pabrai. But needless to say, this move came as a huge shock to me. But is it time to panic or continue to sit on our hands? In this video, I'm going to talk about the portfolio changes for Pabrai funds, and I'll give my thoughts about the situation and some context for reasons why or why not this makes sense for Pabrai. And then I'll talk a little bit about what I'm going to do about it. Please let me know in the comments below what your takeaways are from Pabrai selling 80% of his position in Alibaba. All right, let's jump into the portfolio changes and talk about why Pabrai might have made this change. Okay, so if we hop on over to Mohnish's portfolio, we can take a look, and yeah, of course, we see this huge reduction in Alibaba. That's the biggest change to me. He sold almost 80% of his shares in Alibaba. It's also worth noting that he did add a little bit to his Micron position, about 2%. And on Dataroma, this Alibaba position, it says that it makes up 4.45% of his portfolio. But if we actually hop on over to Ticker, we can see that it makes up an even smaller portion of his entire portfolio. It's less than 2% of his whole portfolio if you include all of the international positions that he has listed here at least. Now there's of course the possibility that he's invested in Tencent, Prosus, or Naspers, or a combination of all three, and they're not showing up here because they might be tracked on the Johannesburg Stock Exchange or in Amsterdam, or even in the Hong Kong Stock Exchange itself. And those would only show up either through shareholder reports or trade reports like we see with NYSE Holdings, for instance, or Edelweiss. It's unlikely that he would be able to acquire 5% of any of those companies, so he probably wouldn't be required to file something that he would be with a position that large. And this whole situation is a cautionary tale of the advantages and disadvantages of cloning super investors. Now, when I talk about cloning, and Pabrai made this very clear in one of his recent talks, that cloning is meant to help you in idea generation, to cull the data set, because there are just way too many companies out there. And if you see another smart person making an investment, then it makes a lot of sense to start there. But as soon as you've gathered your ideas, that's when your brain needs to turn on and your cloning brain needs to turn off. This is not blindly investing in companies. And as we can see, if one is investing in Alibaba only because Mohnish Pabrai is investing in Alibaba, then it's very likely that we're going to leave a lot of money on the table. The key thing here is conviction is key. And if you don't understand the investment thesis for Alibaba, and you haven't tried to reverse engineer how Pabrai is thinking about this, how Charlie Munger is thinking about this, how all these great investors are thinking about Alibaba, then when you see Pabrai sell 80% of his shares, you're going to panic. I hope none of you are in this position, but conviction really helps you stay focused on the business itself. Now, if you don't think that the business or investment case has changed for Alibaba, which I would say I'm not seeing any evidence that it's going to change drastically if we look out 5-10 years from now, then what more can you do but continue to focus on the quality of the business? Now, the share price doesn't have any indication really about what the business is valued at. One Chinese company might be enough in his portfolio, and while he may stick with this pretty small 2% bet on Alibaba, it's pretty likely that there will be some sort of Tencent position in his portfolio, even if we don't see it tracked. We'll basically just have to decipher whether or not he bought it based on his talks and his public commentary. There are tons of reasons why an investor might sell a position. So at this point, there's going to be a lot of speculation about why he actually sold. The most obvious reason being that he no longer thinks that Alibaba is one of his great investment ideas right now. It's been clear from public talks that he thinks Alibaba has a wonderful business model, but clearly something's up. So let's talk about some of the reasons why he might have sold. So typically when Pabrai sells such a big portion of a portfolio position, he's usually trying to get out of that position. So of course, the Alibaba position, 80% sale. He sold 100% of his GraphTech position back here. He did slowly bow out of Stellantis / Fiat Chrysler, but he sold pretty big chunks of that. As you can see, he sold 92% here. So based on this idea, it does look like Pabrai is trying to exit Alibaba, but it's not 100% that that's what he's doing. But on the surface, that makes sense to me. What doesn't make sense is why he's actually selling out of Alibaba, and I don't know the answer to that, but we will just wait and see. Maybe he'll say something in another one of his talks. The move overall has just been really confusing to me because he's heaped so much praise on the Alibaba business, but a lot of people might see some of these numbers where the reported price for sale is 148.05 cents for the share price that he sold, which would obviously be a huge loss for Pabrai because he bought it back in the first quarter, where the price was hovering somewhere above the 220 mark or so. But if we actually look at the Alibaba stock chart for the past year, things might not be as bad as they appear for Pabrai. So if we look at the first quarter, the price was around 230, got up to mid 260s, and by the end of the quarter, it was hovering somewhere around 240. So depending on where Pabrai actually bought into this company, it's possible that he didn't lose much money on this position. So the third quarter starts at the beginning of July. So it was still, the position was at this 220 mark. And then from there, of course, we saw a precipitous decline where the quarter ends all the way at the end of September, and we're hovering about the 148. So this price reported here is just the last known price of the quarter. So that's not the high of the quarter. It's not when Pabrai actually sold. It's the only piece of data that the SEC can actually use to report this price. So yeah, if Pabrai bought this at the all-time highs at 270 and then sold at the all-time lows of 148, he's looking at a pretty big loss. But just based on Pabrai's general intelligence in the markets, I would say that's probably not what happened. For his sake, I hope he was able to pretty much sell it for the price that he paid, which was in the 220s or somewhere above 200. But of course, that's just speculation on my part. And maybe he actually did get scared by the deep decline in the price. Pabrai doesn't seem like the type of investor to be worried when the price goes down. So my only indication and my only hunch is that something else is going on here. Back during the coronavirus pandemic, Pabrai actually sold out of GrafTech because he had said that the story changed based on the changes in the ability for the contracts to be paid out and so forth. But Pabrai has publicly said that he agrees with a lot of the regulations. Now, does that mean that that changes his thesis on the actual investment for Alibaba? It's possible, because you can agree with regulatory practices and think that, okay, this is going to impact the long-term business for Alibaba. I personally don't buy that argument, so I would have a hard time seeing Pabrai actually fall into the basic mainstream media talking points about Alibaba and the future due to the regulations. But my point with this is that it's not 100% guaranteed that Pabrai has a huge loss on his Alibaba position. One other possibility that might have happened is that Pabrai, instead of investing in the New York Stock Exchange listed BABA, he might have transferred over to the Hong Kong exchange. And there's really no way to prove that, but that could be one option of what's happening here. He might have sold out pretty much near his buying price, maybe a little bit less. You can take a modest loss because you're not going to be right. Pabrai always says that John Templeton, who's one of the greatest investors of all time, says that even the best investors are going to be wrong at least 1/3 of the time. So, this might be an example of where Pabrai thinks he's wrong. Of course, this is all speculation because usually Pabrai's theory is, which is one that I agree with, which is basically if you think you're wrong, wipe your hands of the situation and move on to another opportunity. Which brings up another point of why Pabrai actually might have sold Alibaba. And that is because there's opportunity costs to holding companies. And it seems like in all cases, Pabrai is much more enamored with Tencent as a business than pretty much any other business on the planet at this point. Pabrai probably thinks that Tencent is the best business, actually. He said that it could be the largest company in the next 10 years in the world, which is shocking, but actually, it's not that shocking. It's already massive. It's the largest company in China. And if you haven't seen my other video where I discuss Pabrai's two-pronged bazooka approach for Tencent's business model, then you should go check that out because the business model is really impressive. And it's probably going to keep growing for a long, long time into the future. So yeah, we don't see Tencent show up on the portfolio reportings at all. Maybe it will in the future. I really wouldn't be surprised at this point, especially now that he's sold out of Alibaba. All right, I misspoke there. He did not sell out of Alibaba. It is a 2% position. That's a position size that he actually regularly holds in his portfolio. He usually goes 2%, 5%, or a full 10% bet. And of course, the 2% bets are sort of the lower conviction ones. My curiosity lies in what he found out about the business that made him make this drastic change. Now, I hope that I'm not missing something, but it's certainly a spur to redouble my efforts and look for any evidence that I might have made a mistake with Alibaba. One other situation that might be happening, this is a bit of a stretch, but I was actually at a Pabrai annual meeting in Chicago a few years ago, and he talked about some sort of tax play that he did with Micron and one of its competitors, SK Hynix, where it was near the end of the year and there was some situation where he sold Micron, bought SK Hynix, and I forget the exact reason, but this was to have some tax advantage. And then shortly after, he sold SK Hynix and bought Micron back again. So that wouldn't show up on any reported SEC filings, of course. But it is evidence that Pabrai does do some activities like that. So it is possible that he anticipated the decline in the price due to the regulations. Humans are going to overreact because they vacillate between fear and greed. So it's possible he sold at a minor loss back in the early part of this quarter, and then waited for the price to continue to go down, which it has, and reaped a little bit of a tax advantage in the meantime. So still might be too early to call him completely out of Alibaba. Again, I don't want to get your hopes up if you are heavy into Alibaba or anything like that, but it's just something to think about. And also, Pabrai runs a set of hedge funds. There could have been a lot of redemptions. So there's so many factors that are playing into this. We can't really tell. Now, in that case, why he chose to sell Alibaba over all of the other positions that may not be necessarily long-term compounders, only Pabrai knows. But as cloners, we can take this information, look at what other super investors are doing, and continue to think about Alibaba's business. That's really all we can do. Alibaba is now approaching its all-time lows, and I'm just putting this out there. Pabrai might buy the company again, but you know, there's no telling what this man will do. If you haven't noticed, some of these ideas are sort of grasping at straws for the rationale behind this move, when in all likelihood, it's probably just he wanted to reduce his exposure to Alibaba because he doesn't think it's the best opportunity for him. But as far as what I'm doing, I'm just sitting tight. I didn't buy Alibaba to hold it for a year or a quarter. I bought Alibaba to hold it for probably 5 or 10 years at least. And you know, we'll see if I'm making a mistake there. It's very possible I'm not the greatest investor in the world. But in any case, we're seeing some mismatch between what, say, Charlie Munger is doing and Pabrai is doing. Pabrai usually is on the same page as Charlie Munger. So this is a bit of a surprise because Charlie bought more in this quarter and Pabrai sold almost all of it. But hey, if the thesis changed for Pabrai, then he needed to and should sell the position. I'm definitely going to wait to see if he says anything more about this situation, because I would be foolish not to listen to Pabrai. But I would also be foolish to ignore Charlie Munger and all the other great investors who are thinking about Alibaba. Anyway, that's enough rambling about Mohnish Pabrai and Alibaba. We'll just have to wait for his next public talk or his next quarterly filing to see if Alibaba is completely gone or if he ends up buying it again at these very low prices. If you like this video and you're interested in learning more about Tencent, you may want to check out my video over here where I discuss Pabrai's takeaways and lessons about Tencent's awesome business model. Please like this video and subscribe to the channel if you want to stay up to date with more content surrounding Mohnish Pabrai and other great investors. Thank you so much for watching this all the way to the end. I really appreciate your time, and I will see you in the next video.